So
Welcome back. Let's get to top picks from Kim Bolton. Nintendo is the first one. It trades by way of an ADR on the over-the-counter market in New York. Nintendo, why is this a top pick? And you were telling me during break, this company is well over 100 years old. That's awfully old for a video game company.
it's amazing, isn't it? Nintendo was actually founded in 1889. And the founder, I forget his name, they're in Kyoto in Japan. And the founder started his business by painting playing cards. And then here you are 130 years later, and they are the leader when it comes to game consoles, mobile games, IP licensing business. So it's just the playing cards back then were called Karuta playing cards. and they're still around. Anyway, currently trading at just over $10. We just added this to the portfolio today. We took a bit of money out of some of our larger holdings of Microsoft and Amazon and Google, and put it over into Nintendo. You know, they have a number of classic titles, all the way from Mario Kart to Smash Brothers Ultimate and so on. They have a very, very healthy pipeline. They expect to expand on their Nintendo Switch Online subscription plan and so on. But this is just it's a leader in gaming, and it's just sort of flown under the radar. Now, it is an ADR, it's unsponsored. So it is a bit difficult, and depending on what platform you're on, it might be a little difficult, but you can always buy it when you buy the BSD Global Tech Hedge Fund. Yeah,
and I've actually looked, we were showing facts and figures with respect to the ADR there. I've actually looked up the underlying equity in Japan, and among analysts who cover, they're mainly Japanese analysts who cover Nintendo, 17 buys, 3 holds, and 2 sells. So the Japanese street is bullish on Nintendo, and the company does have, there is a PE multiple as well. It's now trading at a forward PE of just under 14 times. Okay, let's go to top pick number 2 on this day, ASML Holding. This is a NASDAQ traded stock.
Well, ASML, they're a Dutch semiconductor company. But they are the guys that have a monopoly in that EUV lithography equipment market. And so they build the equipment that allows the manufacturing of chips consisting of lithography and metrology and inspection-related systems and so on. So they use that sort of deep ultraviolet lithography system that is a patent of theirs. There are other players that have tried to catch up to them, but they have such a strong moat. Now, it is a bit expensive, because it is a monopoly. You know, they're trading at 42 times forward earnings and 29 times free cash flow. Currently trading at $5.78, and we have a 12-month price target of $742.
Okay, top pick number 3, PayPal. You will be the second person I've spoken to today, professional investor who likes PayPal at this juncture, PYPL.
Mm-hmm. So PayPal is so well positioned to benefit from all the aspects of growth in and around digital payments and commerce and services. I'm not surprised to hear you that other people have, you know, a lot of the houses, investment houses, have this as a top pick. And you can see that it's, you know, it's been beaten up over the last year, currently trading right around $70. We have a 12-month price target of PayPal of $105. Now, why? 2 catalysts for PayPal that investors should watch as we go into 2023. First of all, better than expected share gains, and second of all, faster than expected buy now and pay later growth. So they got into that side of the buy now, pay later. And if you are going to go into a slowdown, that's where people are going to gravitate to. So we love that.